Hi, my name is Jason Paltritz, Executive Vice President of Corporate Services for OTC Markets Group. I'm pleased to be joined today by Joe Knight of Oxford Metrica, who recently conducted a study entitled The OTCQX Advantage, Benefits for International Companies. Can you please tell us a little bit about Oxford Metrica and what you do?
Oxford Metrica is a strategic advisory firm. We provide evidence-based research and white papers for both corporations and boards of those corporations in a very customized format, utilizing statistical models to really find the underpinnings of research and produce customized products that boards can utilize.
Can you highlight some of the key findings or data that was derived in the study?
Certainly. Well, the broad aim of the study was to evaluate the impact of international issuers joining OTCQX. International issuers being those with a domestic listing outside the United States. And we did this from three standpoints. We analyzed the impact on US ownership, the impact on liquidity, and the impact on value. I suppose the three broad headline results was a significant increase in US ownership. If you compare 1 year prior to joining versus 1 year after, we find a 7-fold increase in US ownership. And subsequently, that high level of ownership is maintained over the next 4 years. Secondly, in terms of liquidity, we find a significant increase in home market liquidity. And finally, from a value perspective, we find that there's an incremental return to shareholders of joining OTCQX. 180 days after joining, we find that alpha of 150 basis points is generated and returned to shareholders.
Can you provide a snapshot of the companies sampled in terms of their size, scale, geography, or industry and sectors represented?
So we analyzed every international issuer that had joined OTCQX since 2007, so providing over 10 years of data. This provided us with over 500 firms to analyze. In terms of the makeup of that sample, it was very diverse. For example, for size, at the one end of the spectrum, you had large capitalization stocks such as Adidas and Heineken. Equally, at the bottom end of the spectrum, there are smaller firms with market capitalizations under $10 million. So it's very diverse. Likewise, when you analyze both the geography and the sector of the sample, there was a massive cross-section. Virtually every region outside the United States was represented within the sample, including venues in Europe, Asia, and Latin America. And in addition to sectors in the sample, it was very diverse. We had firms in the financial services, industrials, and retail represented in the sample.
We often hear from foreign issuers and exchanges that cross-trading and establishing a secondary trading market in the US correlates to a drain on liquidity from the perspective of the home market. In what ways does the study address that and rebut that claim?
Well, our results point quite to the contradictory element of that claim. We find that when international issuers join OTCQX, they're really increasing their US footprint, having greater exposure to US investors, and are doing so in an efficient manner, avoiding the complexities and costs of a national exchange. And as a result of that, we actually find an uptick in trading and liquidity within their home market. So there isn't a detrimental pull of having a cross-trading, quite the opposite. It actually benefits trading within the home market if you establish a listing on OTCQX.